Hello. Thank you for joining Little Petty's YouTube options trading page. Please like, share, and comment, subscribe if you're new. Sit back and stay tuned. No, I'm just kidding. YouTube. What it do? It's Lil Petty coming back at you guys with another stock market episode. Alright, so in this episode, we're going to give you guys a small update on the market. We're going to go ahead and talk about the small account challenge. We're going to go ahead and give you guys the plays and give you guys an update on what's going on. So, sit back, stay tuned, subscribe if you're new, and we about to get into this lesson/episode. Alright, so let's talk about the markets real quick. Go over this real quick. So we ended the week. Let's look at the weekly chart real quick and see what's going on. So we ended the week basically flat on the SPY. SPY is still holding this up, this channel of uptrend, and I know that the Bears have been having a hard time fighting this rally. We've been having more green days and red days, and people are looking for the pullback, but it seems as if the stock market is still going higher, and the Bears are going to keep getting squeezed until further notice. So until we see a crack, until we get back in this range, the Bulls have the ball. I would say anything below 271, 269, then it's like, okay, and then we still have so much support down here that it's going to be, volatility is still high in the market. We can go ahead and check out the VIX real quick. Volatility still pretty high, but the VIX did come down pretty much 13% today. So the VIX had a down day. We are breaking out of this range. But I would say when the VIX gets in this range back down here, this will probably be a good time to go short of the market, because that's when people will be like, okay, well, we're probably going back to all-time highs. And then that's going to be the time to strike on the short side. You got to let all the bears get. You have to let the bears throw in the towel. The last bear has to throw in the towel before we're going to see a downtrend in this market. So, and that's just kind of my perspective on the markets. But let's check out what happened today. We can see that in the Dow Jones basically was up today. Everything was up. The only down day was Boeing. Boeing was down 6%, and I am a holder of Boeing. Facebook did an outstanding job today. The Russell healthcare was looking good. Consumer direct, I still don't know how to say that. Communication service, informational technology, everything was looking good. The worst that we see today in the SP 500 was Boeing. Boeing had basically the down day, and everything else was basically up. There's probably some news on Boeing, but I'll check it out later. So, but let's get into the small account challenge. Now, I want to talk about some plays that we went ahead and set up, and the plays that we went over the last time I made my last video. So we ended up selling out the Netflix. So let's go ahead and look at the orders. So this was yesterday's trades. We closed out the Netflix, and we left $100 on the table, and we collected the $200. And then we went ahead and sold out of the Nvidia, and I'm going to show you guys why we sold out the Nvidia. And Nvidia ended up, we didn't want to take a loss, so we did go ahead and close out the trade. But as you can see, Nvidia actually ended up, it would have been a winning trade because those contracts went worthless. But on the flip side, we ended up selling out yesterday right around here. They got below our strike levels, so we said we're going to go ahead and cut it so we don't lose as much money. But so that's trading 101. But it's just risk management. But as you can see, the trade played out. The Netflix trade, if we would have held, we would have been able to collect that extra $100. It stayed in that range. And that's the power of credit spreads and just selling premium. But with the volatility, it's kind of, you got to make sure that you're giving yourself enough width. So on the Netflix trade, it was if it got below 407 and above 445, and it didn't. And we played the earnings crush, and we collected $200 premium. So now on the plays that we have set up, that we did set up yesterday, we ended up playing Intel. We played the earnings crush on this, and what we set up on Intel yesterday, we ended up selling the 556 and then we bought the 56. So that gave us the difference between that was the width was 50 cents. And then we did the same thing over here. We sold the 62.5, and then we bought the 63s. So that gave us a width of 50 cents, and what we collected was a premium right here. So the Intel, we got a 21-cent credit on this iron condor. So we sold another iron condor, and what an iron condor is basically saying, when the price of Intel, we're saying that these contracts that we're gonna sell. So look, the earnings report came out yesterday. We sold these contracts in this range right here. We were saying that Intel wasn't gonna go above 63 or below 56.50 by Friday. There was a 1-day expiration. So we played a somewhat, and a lot of people, they don't like to trade these because you can lose, but my strategy is basically we're selling the premium. We're taking on being as the bank. We're trying to collect the premium, but we're not putting up big trades. So that's why the risk management, it makes sense to take these trades. So we ended up risking, like I said, so the spread between that was 50 cents, and then we got a credit of $21, and we sold 2 contracts. So 50 minus 21 equals around what, 37 or whatever. My mouth is off, but you can see that we ended up spending 50 minus 21 is 38 or 39. So we spent 39 times 2, so basically almost $80 to collect $40 of premium, saying that the stock is gonna stay in this range after the earnings. And as you can see, it got killed and after hours. So after hours, our position would have been down. If it would have kept downtrending, we would have lost on the trade. But we didn't lose on the trade because it sold off so much, and then it had a rebound. And what stocks usually will do, if they're not, because they beat earnings, but their guidance was bad. But what most times stocks will do, it'll have the whiplash in the after hours, and then it'll make a decision of which way it's going to go in the next, when the trading day opens up. So we were already down so low, and you can see I kind of set up the trade according to these pivots. But long story short, we collected on, we hit on the Intel trade, so we ended up collecting $40. As you can see right here, we collected the $42. We're actually still holding because we couldn't close them out. There was no bids. So what's going to happen is these are going to expire worthless, and then we're going to go ahead, they're going to fund the account. They're going to give us our money back into the account on Monday. After all this stuff settles, because we sold these gonna go expire. We collect the premium, then we bought those goes worthless, so we collect the profit. Now we did that we made a Boeing trade yesterday too. We went ahead and we sold, where's the Boeing play yesterday? So yesterday we sold the 130. We sold a call. So this is what we did yesterday on Boeing. So on Boeing yesterday, we ended up selling a call saying that Boeing was gonna not go above 138. So we sold the 138 call. So let's look at the let's go to the chart. So this is what we set up. Or no, we sold the put. I'm tripping. Or no, we sold the call. Yeah, we were saying that the stock was going to go down. So what we did, we shorted the call. We sold these right here. So we sold the 138 and bought the 139. And we collected a premium of $41. So the strike width of 139 minus 138 gives you $1, and we collected 41 cents. So $1 minus 41 is 59 cents. So we paid $59 to take on a credit of $41, saying that Boeing it's not gonna go above 139. So yesterday, the reason that I put on this trade, like I said, we're selling short-term options, we're collecting premium, and we're slowly trying to build up the account. So what I saw yesterday in Boeing, let's go ahead and look at the chart. We got this pop up, and then when we started selling off, I went ahead and said, all right, by tomorrow, we're downtrending. I've seen this before. Let's go ahead and sell a credit of the 139, saying that Boeing's not going to pop back up and run up tomorrow. And what happened was today, the stock sold off, and basically we ended up selling out of this because there was still a bid on it. So we were able to get. Let's go ahead and let me show you the trades today. So we ended up selling out. Where's the activity at? It's better look over here. So right here, we gave the contracts back for $3. So we collected the credit. So we collected the credit of $41, and then we gave it back for $3. So we ended up walking away with, you guys know the math, 41 minus $3, whatever that is. So it was like $39. So we ended up getting a credit of $39, and we closed out that trade. Now, what we ended up doing after that, so those are the two trades that we made yesterday. And then we also put on a Tesla. We went ahead and shorted. So let's talk about the Tesla trade real quick. So this Tesla trade, we said we're gonna short the put of the 665, and we're gonna buy the 662. And what we did, we received a credit of 87 cents. So how much did the trade cost? So 662 minus 665, that's $2.50. Let me pull out the calculator, because my math is shot. My math is all over the place. All right, so we got a credit of 87 cents. So $2.50 right here. So $2. Why is it not working on my thing? Whatever. $2.50 minus 87.87 is $1.63. So we paid $163 to say that Tesla's not going to drop below 665 in 7 days. Now, why did I set this play up? I like, for one, the IV. These contracts have a good premium, but let's look at the Tesla chart and see what I'm looking at. So Tesla's holding this. Let's go to the daily chart. It gives you you can see the gap that I'm referring to. So if you come to the daily chart on Tesla, what I'm saying is that Tesla is not going to basically come and drop below this resistance right here, but the trade gives me a wiggle room to 665. So this is where this green line is at. So the IV is up 130%. I like that. You're going to be able to snatch some good premium out of here. The trade was good. It was about a 67% probability of profit. And also, Tesla reports earnings. Ooh, when does Tesla report earnings? Yeah, I think they have an earnings coming up too. And that's why I like the trade too. I can't find it. Yeah, so Tesla's earnings is on. What is their earnings? On 4/29. So this is basically an earnings play too while it's being set up. So if Tesla's going to have an earnings run up, these contracts are going to basically go down, and we'll probably be able to sell out and then possibly set up another play. So this is basically just a bullish play on Tesla, saying we're going to sell these contracts out here. We're saying these are going to go worthless. They're going to drop by the end of, even by Friday, or even by, like, say Tuesday, Wednesday. These are going to drop. So we're just trying to collect some premium unless Tesla stock starts coming down. But like I said, you can see on the chart, we have this gap. The gap comes down here to 450. And the chart is basically telling me that Tesla is holding this uptrend. So I take on the trade. I like the trade a lot. It's a good risk to reward ratio as well. And yeah, so we put on that trade yesterday. So that made a total of about, probably yesterday we made a couple trades. We ended up, like I said, we took the small loss on the Nvidia, we took the loss on the Wells Fargo, and then we also took the small loss on JPM. So those have been the 3 losing trades. Well, Nvidia wasn't a losing trade, so we had 2 losing trades, and then we had a winner of Netflix, a winner of Nvidia, a winner of Boeing, 100% profit on Boeing, and then we hit 100% profit on Intel. So that's 4 winning trades and 2 loser trades. Now we also, so the plays that we have set up right now are the Wells Fargo. This is 21 days out. A credit saying that Wells Fargo is not going to drop below $26 in the next 21 days. We have the Tesla play. Then we also today what we did, we set up this AAL play. Now this AAL play is an airlines play, and like I said, the reason I like this play is this IV is up really high. We actually sold one standard in the money, and then we sold the one out. And the reason I like this one is because if you come look at this chart on AAL, we've been on this downtrend, but I kind of just like, it's basically a dip buy opportunity. So, and I'm willing to take a small risk. So what did we receive on this? So today we got filled on the AAL. We got a 22-cent credit with the 50-cent spread. So we spent like $30 to receive. We spent 60 because we bought 2 contracts or sold 2 contracts. So we received a credit of $44, and our basically max loss is about $60. So I like the trade. It's kind of a, now you got to be safe. You got to be careful because this is hard to borrow. So if this does drop or if this runs up, we just have to cut out, because if not, then these are hard to borrow, and they could hit us with some fees that we don't want to get hit with. So that's one thing to take in consideration. We did set up a Boeing play. Now, after we sold that Boeing, we went ahead and we sold some puts on it now. And we went 7 days out. This is an earnings play too. It's a run up before the earnings. So we're probably going to hold this. Now, what do we get filled on this? We got a credit of $34, and the width is $1. So we spent about $64. Let me pull out the calculator again, because my math is butchered. So 100 minus 34. So we spent $66 to put on this trade, saying that Boeing's not going to drop below 123. Let's look at Boeing. We're saying Boeing's not going to drop below 123 in the next few days. And we put on the trade, and it cost us $66 to receive a credit of $33. So that's basically what's going on. Now this is a little skewed because you can see the contract. It says I'm up 350%. There's no way that's possible. After hours, the contracts will inflate or do some weird stuff, make the spread, so it kind of jacks with your but if you to go ahead and make this, you can see what the P&L is. We did go ahead and fund the account with another $300. So if you go ahead and look, we did go ahead and put another $350 into the account. So 500 plus 350. Our total max, we've put in $850 in the account. The account right now, it says we're up 410, but if you minus the 119, and then if you minus this Tesla one too, because Tesla, this one is that's not real too right now, minus 83. So the account's up basically $200 right now, and we've actually. And then we're gonna receive this credit of $100, so that'll put the balance at $600. So $526 plus $100 when we get our money back from the Intel play. So we have $626 of a cash balance, and our account is at $850. So if you times that by 0.2, you can see we can risk $170. So $850 minus 170. That gives us a 680 balance. So we're basically on track with our max loss of or the max risk of the account to be at about 20% while we're in the smaller channel of it. So, but yeah, those are the plays. The Roku, let me go over the Roku play real quick too. The Roku play, so we sold the 122 and we bought the 121, and the credit that we did receive on this, where is this? Okay, today. So we sold the Roku. Keep closing out the calculator. So we got a fill. So the Roku, we got a credit of $38. We sold the 121 and the 122. So the width between those, the width between the strike prices is $100 minus 38. So we paid $62, saying that Roku in the next 7 days will not drop below 121. So let's look at the Roku chart. Now, as you can see, Roku is on this uptrend, and we're saying that Roku is not going to drop below 121 in the next 7 days. And the reason I like this play too, for one, the IV is up in this this 81 range, and it's going to have, the way I'm looking at it is a run up to earnings. So that's my plays that we have set up for the small account challenge. If anybody's trying to follow the plays, this is for educational purpose only, but this is kind of showing you guys how to fish. Go ahead and look for plays. We did go ahead, like I said, we set up with the 21 days. We're going to be looking for more opportunities for longer term to get more of the premium crush. But as of right now, we're kind of going focus on the 7, 14, 21 day strike prices. And yeah, the smaller plays that slowly build up this account. And that's basically it for this video. YouTube, and Lil Petty is going to check in with you guys another time. It's Friday. We still up in this quarantine, you know what I'm saying? So figure out something to do with your time. Figure out a new strategy. Go ahead and open up a new business. Figure out something, man. Use your time productive. That's all I'm gonna say, and I'm gonna end this video on this note. Y'all have a blessed one. Take care of yourself, and I'm out, bro.